In this episode, my friend Michelle Prather sits down with me, and we have a lovely conversation about her new book, Who's Wiping Your Assets, and the idea of asset-based long-term care planning. We had fun. Hope you enjoy listening.
The solution to one problem is the creation of a new problem. So if we solve this problem, we're just going to create another one, and we have to be prepared for that. But nonetheless, we do have this tsunami coming, and it's a lot of people that are going to be needing cared for because there's not enough people. So we're talking about costs are going to rise even more. Where are you going to get the money to pay for this? And so it's going to fall more and more on the families to do this. But think about the families nowadays. Most people have 2 working parents in the homes, right? Because that's how they can survive because the economy's tough. So you don't have as many, stay-at-home moms or, as there once was where they could take care of their kids and their parents. So what do we do? And I don't have the answer. In my book, I just said, let's play this out, right? And then on top of that, we've got medical technology that's making boomers' bodies live longer. So now we're just adding to it because they're going to live a longer period of time because their bodies are healthier than back in the day. Everybody smoked, and I tell people when they say, Michelle, I don't want to go in a nursing home. And I'm like, okay, well, stop exercising, don't eat good healthy food, start smoking cigarettes, eat a lot of bacon, drink like a fish.
What?
I know, like that's bad things.
Those are all the things I like. No.
Well, I talk about it in my book too. I say, I can remember my mom cooked everything with Crisco. Yeah. I haven't seen Crisco, and I don't know what that was even made of. So
plastic,
probably, but we are more knowledgeable about our health, which is causing that problem, meaning our bodies are going to live longer, and we may outlive our minds and our money.
Yep.
Maybe that'll be my next book, Outliving Your Mind and Your Money.
And I don't, keep going. I don't want to interrupt you.
But we need to be prepared for this. People need to think about it because it is going to be an issue, and the strain is going to be on our families. And listen, you might be one that says, you know what, my daughter will take care of me. I hear that a lot. My daughter is a nurse. She'll take care of me. Yeah. And so usually I say, does she know this is a part of the plan? Because she might have a different plan. And
it could be really lovely for maybe a couple of weeks.
Well, and that's it. So I have one daughter that says, Mama, I love you, but I'm not taking care of you. The other one says, Mama, I would never move you in a nursing home. And I say, bless your heart. You have no idea what you're saying. You don't know how hard it's going to be. But here's the other thing. Can she do it round the clock every day without it taking a toll on her life? Yeah. She will still need some help. She will still need a break. And I read all the forums, and I see so many lovely people and sons and daughters that take care of their parents, and they say it's a privilege, it's an honor that I can take care of them, and it is. But in the same breath, you can also be frustrated and angry and worn out, but also feel that it's a joy and an honor. So what I say is give the guy some help. Even if you don't have a policy that pays out $10,000, $12,000 a month, and you have one that pays out $4,000, that pays for a lot of help. That relieves a lot of pressure off your family because maybe she can take vacation to go see her own grandbabies. Maybe she can pick up the shift 3 days a week and save herself, her health or her mental health.
All of it, yeah.
Just by having a break.
Absolutely.
So something
and still have somebody come in to take care of mom and dad.
Yes. Yep. And again, that's where another, I call it it's your BS belief system. We have a lot of financial advisors out there with BS or belief system that would talk to a client and say, well, the average cost of nursing homes right now are, $10,000 a month. And they show them the cost, and the client goes, well, I can't afford that. And they go, okay, well, good luck. What?
Yeah.
There is always something that we can do. We talked earlier about stacking policies. I have believe it or not, a lot of younger folks that are being very wise.
I wanted to talk about that. You mentioned last night that people are younger and younger people are thinking about this, and it's on their radar. You even said into their late 30s and through their 40s. So, which is like, that's really good to hear.
I had a 29-year-old contact me the other day, and he said, I'm just the planner. I like to think ahead of time, and I want to make sure that I'm doing things right. And I applaud you. You absolutely should. Knowledge is key to everything. Knowledge brings you freedom. And so the youngest person that I've worked with so far that actually bought a policy, a young lady, she's a single lady. She's 38 years old, no children, and but she doesn't want to be a burden on her family. and she's thinking, I have to find a way to make sure I'm taking care of myself. And so what she decided to do was to buy a $7,000 a month policy for life. She did not add inflation protection because
29. I can't imagine
38.
how.
No, this lady's 38.
Okay,
and
still expensive.
Yeah, and she's paying $300 a month. So she said, Michelle, I probably would have went out to dinner a few times with friends and probably,
built on the life policy?
On the life policy.
Oh my gosh. It's like,
ironclad guaranteed.
Yep.
She will never have to worry about rate increases throughout those years. She will have this payout. It's $84,000 a year. $7,000 a month, tax-free. And so what we're going to do is, because of the way that my process works, I will check in with her annually just to make sure things are on track. But she'll stack a second policy on top to help with that inflation. Mm-hmm. So here in a few years, because she's just started a business and she gets to write off some of these premiums, so that's nice, she'll stack another $2,000 of benefit monthly for life on top of that. And we'll just keep on doing that. No different than what we would do with a banking policy.
Maybe. I'm kidding.
We might stack another policy as time goes on.
Yeah. No,
that's what I mean.
I'm totally with you that when it comes to the infinite banking concept, it's a paradigm shift in thinking, no question. And Nelson said it would take the average bearer 25 years to get rid of a mortgage. And you see a lot of that today within the footprint of infinite banking. Oh, I want to go get a HELOC. I want to throw all this money in year one. And some companies, have this egregious first year ability, and all that costs money. And there's a construct to all that, which I break down in other episodes that are at least available on Client Only. And it's like, yeah, it sounds good, but so I think we all have to start where we're at, and no matter what it is we're doing, after a legitimate, research that's unbiased. And so, like the young lady starting and then adding, we had a brief conversation yesterday about the stacking, in which to me makes total sense, right? And, especially 29, 30, but then you go off into maybe the upper ages of your late 70s, early 80s, where stacking may not make that much sense, which every case is different. But then, too, and we've talked about this, a couple of things I want to squeeze in here. I like the idea of stacking, and I think there's an appropriate place for that. And I think the case details and the individual situation, like your policy shouldn't look like my policy, shouldn't look like your policy. There's not a one size fits all. Not everybody wants to pay a 10 or 20-year premium. Not everybody can pay a single premium. Not everyone has qualified annuities or non-qualified annuities or whatever. Every case is different. And which brings me to this point of stacking. I like the stacking, and I'm going out to the older ages, and you mentioned earlier too, the inflation protection, which is an option that you have. And we've discussed that and, a little previously, and we talked a little bit about the inflation, that medical inflation is not the same as inflation. And those inflation riders, you don't personally particularly gravitate to. I don't. And so I think an idea of stacking could be better. Yeah. I don't mind talking in absolutes. I paint with a broad brush because it's a big canvas, right? Yeah. Okay.
Because sometimes I do, if the math works and it makes sense.
Yeah. When it works, it works.
Correct.
Right, I totally agree.
Correct.
Today, right, in for some years, like when people own annuities, and most all of the life insurance companies that you'd want to do business with have these additional riders, whether it's a long-term care rider, an extended care benefit rider, or an accelerated death benefit rider, that is triggered by ADLs, the activities of daily living. You can't perform 2 out of 6 or 7, whatever the policy says. And we put them on every opportunity, right? We, as a matter of practice. But the disclosure, the caveat, the clarity, that is not long-term care insurance.
Correct.
And it is not meant to replace or take the place of long-term care. And so I'm bringing it to a point here that, however, if you have a proper plan that makes sense, you started where you could, whether you add them to them in the future or not, those riders could could mitigate the rising cost of healthcare. So there's a place for those also, but it's not a place for the riders on annuities. and on life insurance is not meant to replace long-term care or take the place of or give you the warm fuzzies and say, oh, no, I don't need to take care of this. I have this on my rider. As a rider on my policy. So no,
the
a hard no.
Chronic illness riders, I like to think of those as break in case of emergency. Yeah, you're going to use that in the case of an emergency. It's not the plan that you should have,
right.
But it's hey, something's on fire. I have to do what I need to do, because they're not going to be as rich as what you're going to get. Or not at all. But also, they could come with some limitations. There is so many different ones out there. Some people think that they have long-term care cover. Oh, I'm covered. Yeah. And what they don't realize is some of those have what they call actuarial discounting, where you don't really know your benefit until you get there. So they can't even tell you. Yeah. So you could call the insurance company and say, how much do I have available for long-term care? And they will go, well, I don't know, because you don't need it yet. So there are some of those. Again, something's better than nothing, always. But some people, unfortunately, think that they have coverage, and it's not the best that they could have.
And they don't. Yeah. And if you just talking about the life insurance, if you have one of those and all the triggers that some of them may require, others are easy, they're all a little different. But let's say if I had a $500,000 face amount policy and I have this rider on there, it's going to pay a benefit out, but it's never going to go above the 500. Most of them won't even go above the cash value. Okay. And if they do exceed the cash value, there has to be a net death benefit. So, you're just where if I had a $500,000 long-term care policy that's built on a life insurance chassis, I can zoom right past that 500 by a long distance.
Easily this day and age, for sure.
And so there's they are what they are, but those are not long-term care is what my point. And so, you want to add to that? Anything to that?
No, I think you're spot on. And that's the unfortunate part is people, have been told by maybe a financial pro that, you're covered and you have this, and they don't realize how limiting it can be. And look, I am in the business of, I don't want anybody to limit me. If I have health insurance, I don't want them to say, Michelle, the average stay in a hospital is 5 days. That's all you need covered for.
That's what I want to be is average.
Yeah.
Right.
Right. I don't want them to cap me because what if it's catastrophic? Yeah. That's why we do insurance anyway, is for catastrophic things. When I talk about car insurance, homeowners, health insurance is what I'm referencing. Because life insurance is the ultimate catastrophe, right? We passed away. But I don't want to be limited in anything because I don't know. I don't cover my house based on hail damage on my roof, which is the average claim, in Indiana. I don't cover my car based on the average claim of, a windshield busting. I cover it for a total loss. Yep. Because I can't live with the catastrophe that my house gets completely mowed down by a tornado.
I love it. It's, the idea of risk, right? Risk is the transfer of risk. Insurance is the transfer of risk. I'm going to pay a premium to a third party, and then they assume the risk. Okay, and they pay a claim, and it's not taxable because it is a loss, a replacement of a loss. Okay, all that, if that were true, and it is, what is the risk of me dying? What is the risk of me graduating? There's like 2 people, 3 people got out of this world alive. You ain't going to be the 4th. Neither am I. It's 100%, 100%.
This is happening. This is happening.
It's a guarantee. We just don't know when.
It's a matter of when.
Right. And as old Nelson used to say, if if there's a certain group of people that not only can tell you when you're going to graduate, but they can tell you how and why. Right.
Well, and let's unpack the risk and consequences. I learned this from a gentleman. He was an attorney. And so I went to a session of his and he said, stop talking to men about risk. They don't understand risk. And at the same time, he said they only understand consequences. And so at the same time, I was struggling with my own husband at the time. He hates when I tell him this, or I tell the story. But
let's just tell everybody.
We're just going to tell it. You're my Dr. Phil today. So I was having a hard time getting him to buy life insurance because I write about it. My husband, is a force recon Marine. He rides motorcycles fast, jumps out of airplanes. He's kamikaze crazy. And so this guy's like, I'm never going to die. And they teach Marines, you cannot be killed. My daddy's a Marine. My husband's a Marine. They all think the same. God love them. Bless them. Thank you. So, but he was like, woman, I'm not going to die. Stop it. I'm fine. I'm not going to die. And I'm like, it's not about you. It's about me. Ooh. I need the life insurance on you. It's not you. It's me. And so I came home after listening to this guy say, stop talking about the risk. Cause I'm like, you're jumping out of airplanes. Your risk is so there. Nah. So he says, I come home and I said, listen, you jump out of an airplane and you don't make it. Here's what's going to happen. I have to bring my mom up from Kentucky, and she's going to have to raise our daughters because I have to work. Somebody has to pay these bills. And without hesitation, he says, okay, I'll buy life insurance. Because the thought of my mom raising our kids, the consequences was too great. He's like, I'm not letting your mother raise our daughters.
Tell us more about your family. No, I'm kidding. I'm kidding.
But that's the difference. So when I'm talking about long-term care, I have a lot of, historically it has been more men, but I'm seeing it women too. Like, what's the risk of me needing care? I don't think it'll be me. It's 70% of the population. Well, I'm a part of the 30. It's not going to be me, right?
My case is different. We all suffer from it.
Right. It's not going to be me. Well, then I talk about the consequences. What if it did? What's going to happen to your spouse? How's it going to break her? Because spouses are the number one caregiver. They take care of their ailing husband, and I tease and say, I can't pick my husband up now. I lift up his legs when I vacuum underneath. I don't do that. I don't pick up his legs. But I can't pick him up right now, and I feel strong and healthy. I can't imagine being 80 and frail and doing it. What's going to happen to your kids? So if one of your kids or many of your kids take care of you, that will also bring resentment and fighting within that family, because I have two brothers. We don't agree on a lot of things. So imagine being just, taking care of a parent. It's a highly emotional situation anyway. And then when you have one that takes on more of that burden.
There's always one.
Always. And
probably two that fight about, no, I'm doing more than you. No, I'm doing more than you. There's always a one.
Always. And so this isn't about you. This is about protecting everyone that you swore you would provide and protect.
Ooh.
You swore that you would. And so this is about them. It's not about you. So when I'm dealing with gentlemen that say, I'll just, I've heard, I'll pray about it. If it happens, Michelle will pray about it. And I said, well, who do you think sent me here to tell you to do this? Right?
There you go.
So I'm a smart aleck a bit. But,
no, for real, she is.
But
cool.
there is some consequences to good behavior and bad behavior. And if you don't plan for this, someone else is going to pay that price. Mm-hmm. And how much of that price do you want them to pay? And by the way, look, if you're right, this still gets paid out. You're not wasting your dollars. Whether you live or you die, this is getting paid out. And it takes away all of that guesswork.
Yeah, but if you need care, it pays out. Two lives over a long time. If you have a spouse, No, I love that. I've never... the closest I've ever gotten to that, I've been accused of being the worst salesman in the world, which I greatly appreciate. The only gentleman that I recall exiting from my office, there was a lovely couple, and I don't really remember all the details of them. I just remember him saying something along the lines. We were talking about life insurance. Mm-hmm. He's like, well, I'm not going to leave her boyfriend a bunch of money or you hear those things sometimes, Sure. And it was along those lines. I'm not going to leave her a bunch of money for her and her new boyfriend to spend, or along the lines of, I don't care. She's on her own. It's like our conversation is over. Yeah. Life insurance it only makes sense if you love and care about someone.
Yeah.
Period.
Yeah.
Period.
Well, and those are the kind of people I want to work with. I want to work with people that love their families. They want to leave a legacy. Yeah. They want to protect what they've built. Yeah. They love their spouse. Yeah. They want to make sure that they're taken care of and they're not broken, because it's devastating. You can talk to anybody that has performed caregiving or, even received care. The dignity in that. Yeah. I tell, my husband, I'm like, you don't want your daughters doing certain things.
Right.
I promise you don't want that. And so we will hire a stranger to do those things. And I'm completely fine with that. But then we also get into, believe it or not, there are some families where they don't have kids,
right,
or they don't have good ones, right? Not all of them are great. And so we get a lot of, 90% of fraud, neglect, and abuse for elderly is done by family members. So yeah, now we're complicating it, because now we're throwing a bunch of money in the mix, because we do have some people say, well, I'm going to pay my daughter to take, out of these policies. And those are features. And my daughters may choose to do that, may choose to receive payment for taking care of me. They won't do it for long, because they'll realize how hard it is. But then that complicates things, because how is anyone checking to make sure mom or dad is getting properly cared for?
Great point.
So again, I want to hold people accountable, and I can, someone that I hire in a home health care agency, my family can hold them accountable, and they can oversee my care rather than providing it directly. So you want to have an advocate in your family to make sure that things are being done properly.
Yeah. I'll take this opportunity. I married up, like I hope all of y'all did. My beautiful wife, she's younger, right? Farmers from Nebraska, going to live a long time, whatever. I tell her, I'm like, Jana, I'll hire you the 2 best nurses that money can buy.
Yes. Yes.
It's a joke.
Yes.
All right. And I like the risk and the consequences. Men don't think of risk. And
I'm thankful for it. Yeah. That's why they run into burning buildings and do the, crazy things that we need good, strong men to do. Yeah. All the, on the side of a building, cleaning window. I'm not out there doing that. So I'm thankful for it. I'm thankful that they don't see risk the way that maybe when I see everything as a risk. I'm a scaredy cat. I hear a police scanner. I'm like, well, I'm not going outside. Everything's a risk to me. Or I'm checking on my kids. Are you guys safe? I heard there was a car accident. They're like, Mama, we're at work. We're
tracking
fine.
Your daughters everywhere they go.
Yes. But that's how I am. And look, there are some men that are very risk aware, and some women that, they're kind of crazy and do crazy things too. So I'm generally speaking, I'm thankful for it, but it also can cause an issue if they're not aware of risk and how to prepare for it.
Yep. I'd like to talk about, if you have time, the idea, of cost, right? Mm-hmm. It's like, well, I'm younger, I'm older, that whole idea of cost. And really in the aspect or in the context of, maybe you're not 29, you're not 35, you may be a little older, you understand your physical abilities are changing. It's like when I used to work out, it was all strength. I still like to work out and focus on strength. But, this idea of agility and balance, the older I've gotten, it's like, oh, yeah, okay. That I would never do that when I was younger. Sure. But I'll do it now. Yeah. But the idea that, we've created something, whether it's a family farm or a business or just uber successful real estate, whatever the case may be, and I've got, I enjoy put together, $500,000 or $1 million or $5 million in net worth. And I'm not trying to throw out big numbers. I just want to set the context that we've created whatever we've created. Mm-hmm. And we want it, for us first, right, to enjoy, the next part of our lives. But the residual, if I didn't spend everything, if we didn't give everything away, it's going to go to the people that we love or the causes that we care about or both. Okay. And whatever number that is, right? And I mean, I don't care what the number is. $1 million, it's worth $1.5 million total. Everything, that you've done. Mm-hmm. Put a financial value on there. Maybe it's 10 million, 15 million, whatever, 20, whatever it is. All right. And the idea of taking a percentage of your net worth that's growing, right, and using that to protect the remainder, right? Whether it's 5%, 10%, 20%, whatever the number is, right? Does that make sense to you?
It does. There was a financial professional back in the day. I haven't heard from her in quite some time. She may not be in the industry anymore, but she used to tell her clients, "Would you be willing to take 3% to protect the other 97%?"
Exactly what.
And who wouldn't say, "Well, yeah, what are you talking about?" And so then she would start talking about long-term care and how it's the biggest. It really, quite frankly, is one of the biggest risks in retirement. If you were to just pass away. That's actually easier. I know that sounds terrible, but it's so finite, we know exactly what's going to happen. But if someone needs care for a very long period of time and they're hemorrhaging hundreds of thousands, that's what's going to cause the issue. So that's why she said it that way. Are you willing to take a small percentage, to protect your entire portfolio? And who wouldn't say, well, yeah, I absolutely would. And that's what we're talking about, is just a repositioning of an asset or an income, moving it from one pocket to the other pocket to make it work bigger and better, more efficient. Now, over here in this pocket, it is designed primarily for that care income stream that you can't outlive. So it's protecting what you've built. I mean, you've built, you have people that are reliant on you here. You have employees here. You have children. You have a spouse. They're reliant on you. And if something happens to you, it's going to cause a ripple effect, right? So you need to make sure that you're prepared for that. And most people aren't, unfortunately. Yep.
That has always made sense to me that, I like round numbers, 10 million, 5 million, I don't care what it is. Would I take 10% of, 500,000 on 5 million? Yeah. Yeah. Could I do it in 5%? It almost doesn't matter.
Right.
It just doesn't matter. If I have built something today, and I'm a good husbandman, I take care of it, I pay attention, and I'm a good steward, it's going to grow. Yeah. Right? Yeah. So if I took 10% of 5 million, this is just for me, and I'm not trying to put numbers on anyone. It's just, if I took 500,000, the 4.5 is still going to grow. Oh, and the 500 will too. Yeah. And I'm not going to lose anything. Right. I'm not losing anything. Right. As a matter of fact, you talk about leverage. If the primary purpose, the care is needed, then that 500,000 in my example could turn into well over a couple million.
Well, and that's what we really need. So thank you for doing this, because we need people to start changing the way they view this. If everybody is just rate of return, and that's what we've been taught as consumers, and just, you need to grow, you need to have a good rate of return.
We'll be dependent upon me, right? The financial guru, the professional. It's too complicated for you, so you rely on me, and I'll spit out a couple of reports and, bedazzle you with rates of return.
Right. So. You're going to get 12% in gross stock mutual funds.
Yeah,
Mr. Dave,
for 30 consecutive years.
Yes. I'll give you an example. So back to that younger lady that I worked with just a few weeks ago, put a plan in place. She's going to do $300 a month. She knows it's going to be consistent, and it's going to create, when she needs it, not if, but when, $84,000 a year for the rest of her life tax-free. Imagine if that were a 401k. Yeah. Imagine if your employer... I bet
you've already done the math, Michelle. Come on.
Well, think about it. Imagine if your employer says, Michelle, all you have to do is put in $300 a month. So $3,600 a year, we'll say, $3,600 a year, not a penny more. And we will guarantee you back, when you need it, $84,000 a year for life tax-free. Is that a good deal?
Yeah.
Yeah. I'm going to double my contribution.
Unless you're younger than 59 and a half, and then we're going to, let you have it after a penalty, and then it's taxes.
Right. So this is a 401k for long-term care. I'm in quotes. I'm teasing.
You're making stuff up as you go.
Yeah. Who knows? I might start riffing. We might go somewhere. But think about it. I talk about real estate. So I'll use the example that I used earlier with the two 60-year-olds repositioning $150,000, getting $91,000 a year each for life. That's $7,500 a month, by the way. So what if I told you that here in the area that you live in, there's a rental property, and you're going to buy it as a rental property. That is the sole purpose of this, and you're going to pay $150,000 for it, and the rent you get is $7,500 a month. Guaranteed. Is that a good deal?
I'll buy 10 of them.
I buy 10 of them. Exactly. Now, here's my question. So again, you're going to pay cash, lump sum, $150,000 to get $7,500 a month or $91,000 a year. Do you care what the market value is of that house?
Absolutely not.
Why?
Because I have a cash flow.
Because you have a cash flow. That's long-term care.
Yeah. And I'll even take a loss if I can.
Right.
I'm just saying, totally
because
agree.
people will naturally want to look at the cash value growth and go, I can do better.
Yep.
You don't care about the market value of this particular property because it's the cash flow that it provides that you cannot get elsewhere.
Yep.
That's what we're talking about. You cannot replicate this anywhere else.
Can't be done. It's just like you can't replicate life insurance. I don't care what financial guru is out there and wants to pencil it and, beat me up because I'm a life insurance agent only salesman or whatever box you want to try to put me in. Right. I don't fit, brah.
Right.
So
that's right.
But talking about, I like real estate, and I prefer it to be commercial, triple net lease. I don't want to deal with tenants. Can you make that happen? Oh, and then can you make that income tax free, $7,500 a month on $91,000? Yeah.
Oh, and double it when both you and your wife both need it.
Oh, it turns into $15,000
per month. Yeah.
I know I should be better with numbers. Yeah.
So again, for the purpose that it is set aside for, again, we'll go back to wealthy people. They don't have one bucket that everything comes out of. Yeah. This bucket creates this is a cash flow bucket. This is an investment. They might have different buckets. But you have to understand, why do I have this in place? Yep. And so these are not designed to make you rich. I said it earlier. They are designed to keep you from becoming poor. This is the cash flow. So if I'm living on the 200, just like when I started earlier, and now I need this additional 100, where do I get the 100 to fill that gap so that my plan remains intact? Yep. This creates the cash flow to fill the gap, so that my spouse's retirement lifestyle doesn't change, so my kids aren't freaking out. I don't have to sell off property at an inopportune time or in a down market. Yeah,
it's always, when is a forced sell?
Right.
Oh, it's always at the peak of the values, whether it's real estate or, the market. So I know.
So you're pulling money out in a down market, or you're selling off a piece of commercial real estate at a loss because you have to, because you're hemorrhaging dollars. So that's what we're talking about, is just basically, controlling the chaos with a consistent cash flow.
Ooh, I like that word, control. This type of solution to the long-term care problem, whether it's nursing home, home health, whatever, is like, I don't know what would give anyone more control, much less as much control. I truly don't.
Yeah. But a lot of people, they maybe have bought, we were talking to someone on the phone earlier. I don't want to call her out. So we were talking to her.
I'll blast her.
And someone had helped her with long-term care.
Yep.
But they didn't set it up properly because they thought that they knew long-term care. Yep. So if you're not working with someone that understands the different options that are out there, you said it earlier, these can be tweaked and tailored to fit whatever it is that you need, because your needs are going to be different than mine. Yep. You have employees, you have a business. Guess what? You have some tax deductibility. You could even do a group long-term care policy very inexpensively. There's so many different options out there that people are just unaware of. But if you go to a financial pro, they're going to go, yeah, I can help you out with that. And they can sell you anything.
The rate of return.
When it comes time to deliver on that, that's where it's going to be a problem. Yep. Because she didn't realize that her policy wasn't set up correctly. She thought she had something that she did not. Yeah. And so I'll help her out with that. But in the meantime, she was, this whole time thinking, nope, I'm good. I got it taken care of. So if you don't go to the right people, you could get yourself in a pickle.
Yeah. Totally agree. Mm-hmm. The I don't want to speak too broadly, but I've done this 35 years. You've done this 27 years, and you've had to deal with more, I'm going to be gracious, financial professionals, because I avoid them. Yeah. Right. I'm like, thank you. God bless you. Hope
I've dealt with thousands. I've dealt with thousands.
Yeah.
Some of them are great people, by the way.
Yes.
They're great. They've got a good heart.
Yeah.
But some try to be a jack of all trades and a master of none. Yeah. And that's where it causes problems.
Yeah. Totally agree. A very large part of our practice, my practice, is, and of course it makes sense if you think through it, which kind of surprised me 10, 15 years ago. It's like, not all, but a large part, I'm cleaning up mistakes that really shouldn't have been made.
It's true.
And it's like nothing like opening up a case that you've put together or worked on years ago, and it's like, well, whoever did this is smart.
Look, I know annuities. I know annuities very well because they have long-term care annuities. I know I had my securities license, but I'm still not going to make those recommendations because that's not my specialty. It's not what I focus on. It's not what I study and research and eat, breathe, and sleep every day. This is all that I do all day long.
You mean you don't practice outside of your abilities?
No. I would never do that because, well, one,
that's not.
I can't live with knowing that I put someone in something that was wrong for them. Yeah. I can't do that. Yeah. I can't. And nor do I think it's necessary. I think you help people the way that they need to be helped. And I have turned people away saying, this isn't the right time for this. Mm-hmm. Here's what we need to do. And let's focus on this and let's reconvene at a different time. Yep. Because if it's not right, then it's not right. I'm not going to do that to someone. I just had a lady last week that I had to have that conversation with. And she's gone through some rough times and she's not in the position to do this, but she does have her mother that's receiving care. And she goes, I don't want to do that to my daughter. Thank goodness, but it's just not the right time financially for her to do it yet. So I've given her, here's what we want to have happen without giving too much detail. We want this to happen and this to happen, and then we will be prepared for you to have it at that time. But I will say this for your audience, you'll never be younger or healthier than right now. So don't wait because your options get more limited the older that you get and the more ailments start to pop up because it's just what happens when we get older. So those options get limited and of course they get a little bit more expensive. It's not unbearable. I'm dealing with two 68-year-olds that are extremely healthy. They're in the farming community and they do have a C Corp and they do have an LLC. And the C Corp is the sweet spot with long-term care because you can tax deduct 100% of the long-term care premium, not the life insurance side, but the long-term care side. And but the numbers are still glowing. They still make absolute sense. Had they done it when they were a lot younger, it would have been even better. But they didn't. They didn't know. And so you're right. I'm getting people that are in their 30s and 40s and they are seeing what's happening with their boomer parents and they're going, I don't want that to happen. I want to be prepared. And through knowledge, like podcasts like yours, thank you so much this is a fantastic service for people to get education and knowledge in bite-sized and easy to digest ways. Otherwise, they wouldn't even know. They wouldn't know that some of the types of planning opportunities are out there and how they can take care of their family. And so it takes listening and paying attention and wanting to get the information, but then acting on it.
Yeah.
And I end my book talking about a childhood pastor. He said, you can't open a book, read it, shut it, and pretend like you didn't read what you just read. Meaning, once you have the knowledge, you are now making a conscious decision. You can't say, I didn't know anymore.
Yep.
Now you're either doing something about it or you're not.
Yep.
And that's a conscious decision. So
yeah, the ignorance is a conscious decision. Mm-hmm. Ignorance, just and I've talked to Doug Jones about this in the past, and I've even mentioned it. The idea, not ignorance, but to ignore something means that you're aware that something exists,
right?
And you choose to ignore it.
And usually someone else pays that price.
Always.
Yeah.
Yeah. It's always someone else, right? Yeah, not me, right? Yeah.
That's correct.
Is there anything that we didn't? I love this, and I would do it in two parts. I love the idea. I mean, I listen to podcasts all night. That's all I do in lectures, and gives people the opportunity to listen on their own terms and rewind and hear something again. How was that said? And just don't judge me on my English, please. It doesn't matter. I'm okay with that. I know I don't speak proper English. But is there anything that we didn't or haven't talked about that
Oh gosh, there's so much we could still unpack in different categories. But I mean, I think we gave it. Hopefully your audience will listen to this and say, I didn't think of it that way before. That's an interesting way. Maybe I should look into it myself. And that's the ultimate goal, is just to give people education so that they can, they can make good decisions for themselves and the people that they love. Thank you for reading my book, and thank you for mentioning it. That's very kind of you. I wrote it tongue-in-cheek to be kind of smart-alecky, because most people don't want to talk about this because they've only seen the sad part of this. And so my hope is, if you can find levity in a situation, it makes more people want to talk about it, and it's not that bad. As long as you're prepared for it, it's not as bad as what we see a lot of people go through. But it was fun writing it. That's 30 years of conversations, and I just finally put it down in paper. And I actually, Mary Jo was teasing me about it. She was like, Michelle, you wrote such short paragraphs. I'm a big reader, and it's kind of throwing me off. And I said, well, it's a new way of writing for sure, but people scan now, I think, and I just tried to make it very scannable. I didn't put a lot of repetition in there. I hate the books where you read it and you're like, oh my gosh, you've said it 15 times. I get it. So I hope that people enjoy it. I hope that you did enjoy it. Maybe there was a couple chuckles in there. Let me ask you, what was your favorite part, or what do you remember most out of it?
And you're welcome, and thank you for taking your time seriously. I mean, she traveled to be here, so I greatly appreciate that.
No, if I'd enjoyed it.
It was all, I like the book. I like the way you wrote that. It is a little different in sections, but in a good way, right? Because you're writing about a topic, and we're talking about a topic that is not the favorite thing you want to talk about, right? Or even deal with. So I think it was and I've used the word pithy, I like the way you laid it out. I like the way it was in very digestible. You say paragraphs. I'm okay. I mean,
some of them are.
I could read it, and I'm an avid reader. I've actually been catching up on my reading. So I like the way it was laid out, and I like the attitude. The I don't know. I say pithy, but a little. Even I would venture to say, or add a little bit whimsical. You have a sense of humor, and you're bringing it to a topic that could be very laborious, right?
Yes.
So I like it, and the main thing, and there's several points. I think we've talked about them earlier about the income. Just the perspective of income, and it's tax-free, and you can get into all, but income, right? And then the comparisons that it's like, whoa, you didn't get all mathematical, right? But this is tax-free income and what that could mean. And you touched on family, which I think is important in from the different perspectives of all the characters in the play or the participants. But what really I think set with me, and I was kind of surprised more than some other things, was just, we all know what do you call it? The silver tsunami? Okay. Yeah. We all know this is coming. Heck, you're part of it. And I know there's a big generation right behind us, so you're not immune, right? We've seen this aging of America, the graying of America. We can go back, and there's lots of people that have done lots of work, and you've referenced not necessarily the works, but the like the real estate, the housing, the travel, the leisure, and all of these aspects of life that the boomer generation has affected because of their numbers.
Yes.
And this is we're right at the precipice, and I think we've really we're well beyond the precipice, but I think this, the big hump's coming. And so here's what really set out with me more than I expected was, what is that going to do to the healthcare system, these current providers that provide the care? The home health care, the nursing, skilled, unskilled, the living facilities, the group homes, whatever the part of the medical community is going to be there to serve the need.
Yeah.
What is it going to do to them? They're already strained.
Yeah.
The prices are already going up. We talked about inflation, and you've written, it's what is it going to do to the system that is in place, our healthcare system? And it's going to be devastating. And I'm an eternal optimist. I'm just saying that's a reality that I hadn't really thought through.
It is.
Right.
Yep.
And then I have seen within, my life, our clients, the families that step up. We want to care for our loved ones. There's no question. But what it really does to the family. And then when you put those two together, the healthcare system can't accommodate. And I get it. There'll be some robots potentially that'll alleviate some of the issues. But the healthcare system can't accommodate this way. Right. So it's going to be forced upon the families. Yeah. All right. And then if you have coverage or a solution, right, that will help help the family not disintegrate as they might otherwise, could. So those two things, really, if I put them together. Well,
and there's something we didn't talk about. So now I'm going to go on a little tangent, and I'll be very careful. So not only
she's naming names now.
Well, because we're talking about government. And so a lot of people believe that Medicare pays for this. And it's confusing because Medicare does pay for nursing home. However, it's rehabilitation. It's for a very short period of time following a hospital stay. So people will go, oh, Medicare covers that. I'm in good shape. Yeah. It does not. That covers skilled care rehabilitation. What we're talking about is custodial care. You're not rehabilitating. Your body is failing you. Your mind is failing you. And you're not able to do certain things for yourself. That's custodial care. And so, for instance, my grandmother, when she had her stroke, she was in the hospital. They moved her to the rehabilitation wing.
That's where they go.
Where she had this beautiful, large, wide bed and these, it's wood, everything. And then when she was done with, because Medicare will only pay up to 100 days, the first 20 is fully paid.
Yeah, but it's not a full pay for the 100.
No,
it's
from
20 and then it decreases.
Correct.
Right?
From 21 days to 100, they pay a very small amount. But then after that, she moved to the Medicaid wing. And Medicaid is not an entitlement program. I've heard so many people that say, well, I paid in, it'll be there for me. Medicare is an entitlement. Medicaid is a needs-based program. And it's mostly funded by the states, partially funded by the federal government. And here's what I will say. So not only do you have states that can't print money, like a Fed can, right? So the states have to find the budget. They have to figure it out. And so now you've got this wave coming in. But then on top of that, here lately, we've heard a lot about fraud being found within Medicaid programs. And it's going to be in every state. They just found some in the state of Indiana. And we're not talking about a little bit. We're talking about millions and millions and millions, some even billions of dollars that is being done fraudulently because of home health care agencies. There's no oversight. Or if there is, it's very little. And so it's a problem, and that has to be corrected. But remember, Medicaid means you have to spend down assets and income, because you have to meet both income and asset levels. And we're not going to go into all the details. I'm not an elder law attorney. I just know, generally speaking, they don't want to impoverish a healthy spouse because one spouse needs care. So that helps. They're not going to have to get rid of their house and car and stuff like that. But if you're a single person, they will leave you with a few dollars for, a haircut and some toiletries. You don't get much income after that. They will take pretty much your entire Social Security check. So I don't know about you. I'm thankful that we are a country that takes care of people that cannot take care of themselves. They can't afford it. My grandparents were recipients of Medicaid. But I have worked my entire life to not be on welfare. And so that is the last thing that I want. And besides that, remember, with the supply and demand issues, with the silver tsunami coming, cash is going to be king. And private paying, you will have a lot more choice when you are private paying than what you will. The Medicaid beds and the reimbursement is so low that nursing homes will they have to limit how many Medicaid beds they have. And then the private pay, which is also kind of why they charge a lot more for that, because they have to make up for the deficit that the government's not reimbursing them for. So look, this is a growing problem. And again, we've got boomers coming in. We've got Medicaid being raided by a lot of fraudulent people doing some really bad things. I'm concerned with what states are going to do. such as the state of Washington, where they had a knee-jerk reaction to this problem, and they decided, well, we're going to implement a new tax. Every W-2 employee, whether you work at Burger King as a 16-year-old or you're an older person, no cap on your income, they're going to pull out 0.58% of every dollar. And they've already said before it was even implemented, that's not enough. And the benefit it only provides is $36,000, $36,500. That's nothing. That's nothing. So they're trying to react to this. The state, I think they tried, but they didn't even scratch the surface. So we have to take ownership of our own problem. This is my opinion. I'm probably being a little bit harsh here.
Oh, no. Go ahead. Give me a minute.
With education, it is our responsibility to take care of our life and our family. And so I'm doing everything possible, which is why I left the corporate world to go and work with clients directly. That's why I wrote a book and, hope that people read it. We need to take care of ourselves. You cannot count on someone else being there to pay for you or take care of you.
There is a lot there. But when you bring up government, which is fine, and I'm about as anti-state as you can be, and a narco-capitalist, the idea that there is a problem, no question, and they're trying to solve it, and they need to figure it out. Well, it's like, we have, okay. They're going to solve. They don't solve anything at all, in my opinion. You're being graceful. Then they're going to tax. Okay, tax. What a socialistic idea that the private pay is going to be more because we have to. We're all subsidizing, the people who can't help themselves or not able. I'm all for that. The idea that the government is going to solve any problem that you have is, you might need to rethink that. I'm speaking for myself, right? And from my humble position, in Medicaid and Medicare, no, the Medicare tax is nothing but theft of private property under the threat of force, right? It goes right into the general revenue fund. There is no Social Security lockbox. There is no Medicare lockbox. This is direct tax. Yeah, it has a purpose on the title of it, which is not the body of the law. The title is not the body of the law. Anyway, I could go on and on about that, but I'm 100% with you. Now, if you're going to rely on the government to take care of you, there is a better way. There's no question there's a better way. There's a better outcome. There's a better outcome for not only you, but all of society, in my humble opinion. But Medicaid is not the solution. And, you turn 65, that's an age-based trigger. You're 65, you're eligible for Medicare, right? Then this is and I don't practice Medicaid planning. We refer to board-certified elder law attorneys who are licensed to practice Medicaid planning, right? So I don't practice outside of my abilities or my profession. But Medicaid is not a solution that you're interested in if there's any way that you can avoid it, in my opinion, in my experience.
It's usually a crisis situation. Like,
absolutely.
Here we are, and that's what it's designed for.
Absolutely.
But there are people that are actually planning for it. And again, okay, let's play this out. So we've got boomers coming. We've got the silver tsunami coming. So let's say here in your hometown, they only have 5 Medicaid beds. I'm just making up numbers. Well, you're number 6.
Yeah.
Well, you don't get a choice. So now you got to go 30 miles north. And now your wife can't drive and see you because she doesn't drive at night. She's older, she's frail. Your kids are all over the place, but now you have to go wherever they have something available, if they have it available. So when we get into the supply and demand issue, what's that look like? Is there going to be enough care providers and care facilities, regardless of who's paying for it, whether it's the government or not? Yep. So do everything possible to plan and prepare for yourself now.
Yep.
People will say, Michelle, at what age should someone buy long-term care? Right now.
Well, you said earlier, we're never any younger or healthier than we are right now.
That's right.
And so, premium pays for it, but, you got to qualify. Yep. But there's low level. Yep. I don't want to say low level. These are appropriately underwritten.
Yes.
Right.
Yes. Well, there's options for people up to age 87. I know. People go, I'm too old to get it.
Yeah.
Maybe not.
Yeah.
Maybe not. There are options out there.
Yeah, I should probably retract some of the rant on the government, but the government is not a solution to your health care, right. Especially your long-term health care.
Well, even if they are, there's a price you're going to pay for it. Meaning you're going to give up dignity, control, options, choice.
That reminds me, my grandmother, I think she graduated about age 84, and she was in a facility for a very short period of time. Mm-hmm. And it was, not a private room. It was a shared room. And my grandmother taught, Sunday school. She was, I don't know that I had ever heard her cuss, and she was in her right mind. Yeah. Right. But, her body was failing. Sure. Right. And so she's got the shared room, and we went up there to see her, and she's like, this beesh over here won't turn the TV down.
Same thing with my grandpa.
The way
he dealt with the same thing. Oh, yeah. It tortured him. He was tortured. Yeah. Because the guy in the room that shared it with him was almost deaf. So he just had his TV blared 24/7. Yeah. And my grandpa was the quiet one. My grandma was the loud. That's where I get it from. My grandpa was the quiet one, just liked to paint and read his Bible. And it was but he didn't get a choice because he was on the government plan. Right. He didn't get to go, get me out of here. Or he couldn't afford to have someone come into his home and take care of him. That's where he could go. And that was it. Because at that time, this has been a while, he died in 2008. They didn't have home health care allowed, in Indiana that we knew of anyway, for Medicaid. So you had to go to a facility. It's unfortunate that he spent, he fought in World War II and contributed to building this country. He was a truck driver and loved his family, and he had to spend the last days there. And that's unfortunate. And he didn't have a choice. Yep. And you don't work your entire life for freedom to end up like that. Right. And, it was awful.
If you have a choice, make it, exercise the right.
That's it.
Okay, well, thank you very much is there anything else? I don't want to cut you off.
No, I thank you. I this is fantastic.
Well, I agree. Yes. And you're welcome. Thank you for coming. The book, we'll have, links in the notes, bios, or whatever. Mm-hmm. And you should get the book and you should read it. I think, it's affordable. It's an easy read, and you'll benefit. I'm telling you, it will help you.
You'll have it done in 2 hours, maybe. Doesn't take long.
It took me all week to read it.
Did it?
I was
in pieces.
I was digesting
in
it.
Pieces. You were studying Michelle's way, or trying to understand what I was saying.
This is
since
pithy.
I say some weird things.
No, I think I understood. I got it. Yeah.
I just typed it like I speak, so they are getting Michelle in there. That's for sure.
Yeah. You've been a joy and a pleasure, and again, thank you for coming down, and I appreciate you.
It was my pleasure. Thank you.
You're welcome.
Thanks.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.